You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, am I centered? I don't really feel centered. But hey everybody, it's Jonathan Rose. Welcome to Masters in Trading Live. At Masters in Trading Live, I get on here every day the market's open, 11 o'clock Eastern time, share some thoughts. I really do. I'm like, how can I add the most amount of value to those that are taking their time to listen today? That's really like my modus operandi every time I get on here. So today, what are we going to talk about? We're going to talk about post-Fed. Fed came out, dropped rates, half a bip, unexpected. What now? We're going to talk about rates. We're going to talk about the market. We're going to go through a little bit of a history lesson. It gives me confidence during these times. I think it will do the same for you. I think you guys will like that. I want to talk about the economic cycle. I want to talk about uranium a little bit. Uranium is flying higher. Man, they can't get enough of that yellow cake. And then we'll talk a little bit about Bitcoin. Okay, let's go over to the slide deck. Let me get a glockenspiel. That's my glockenspiel. And now we'll go to the slide deck. One more glockenspiel for good measure. Just because I found my sounds, which was really fun for me. Okay, friends, let's go. We're going to start here. And why I'm starting here is we're looking at the QQQs. Here, we're looking at the VIX. The VIX is the VIXI. The VIX is a measure of uncertainty. Most people follow the 30-day VIX, which is going to be right here, right? 16. We like to look at that VIX 9-day, a shorter term version of the VIX. The VIX 9-day is 14.05. That is nothing. There's not a lot of risk in this market. I see the conversation in the Discord a little bit too. I feel like people want to buy puts. I feel like traders are looking for a reason to put risk into this market. But there's not risk in the market. Follow that VIX 9D. Right now, the QQQs are down and are trading lower, but there's no risk. The support area to look for today is going to be right here, guys, 478. 478, and I am extremely bullish this market as long as that VIX 9D, you know, right now say it's 14. If it stays under 15, extremely bullish this market. I'm not buying into the fact that we should be selling off. Okay. Let's go for a history lesson. This is very cool. What do we have? I'm going to take you to the actual site. So this right here is a screenshot from this site. And this site is called stockcharts.com. And on stockcharts.com, they have what they call a dynamic yield curve. And so how this works. We're right here, and now I'm going to animate. So here is the yield curve, and the yield curve is rates from 3 months all the way out to 30. Now, this yield curve is coinciding with 2000. So in 2000, here's the SPX. In 2000, the yield curve was flat with about 5% interest rates. Market is going down. Market is going down. Market is going down. There's starting to be shape in the yield curve. The front end rates are going lower and lower and lower, bringing the cost of capital lower and lower and lower. So watch what happens in 02, 03 once we start hitting the bottom. Everything is roses, right? Beautiful shape to the yield curve. This is how it normally should work. Lower front end rates, further back end rates. 04, 05, look at the yield curve is starting to flatten out. Flatten out. We're at 05, 06. Now it's getting really flat. This is a red flag. That is a dead flat yield curve between 3 months all the way out to 30 years. Let's keep watching. 06, 07, we're going inverted. Notice that front end starting to be higher than the back end. That is a problem. What does that cause? Well, the market gets absolutely crunched. Fed lowers rates. They're going to put borrowing rates down to like 1%, all the way down to 0, trying to stimulate the economy any way they possibly can. Fine. Their rates are 0. Cost of borrowing is nothing, right? So you have all these monster companies now borrowing money for 0. 09, 010, as we keep going, they're going to take rates all the way down with free capital, right? Free capital. Free capital. It costs nothing. Bull market, bull market. Front end gets a little bit higher. We walk into COVID. COVID again. They're going to pin those rates down at 0, right? Put money into the market. Get it up any way they possibly can. As they get confidence in the rally, they no longer need to sustain this rally. They could start putting up rates. But what does the market do? Sells off, sells off, sells off. And then we get, I would call this like the AI rally right now. Boom, 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 boom. Until we can see, till present day, what the shape of the yield curve looks like. Now, right now, we know that is a dangerous shape, right? Dangerous shape. This is the same kind of shape we saw if we go back to 06, 07. Look at 06, 07 and look at it now. But what is the Fed going to do? The only way this remains to be extremely bullish is they have to take the shape out of it, and that's what they're going to try to do on the front end. They're going to try to do that on the front end so it looks like a normal yield curve. That's what they're going for. So if the Fed continues to reduce those front end rates, we should see a very, very, very strong rally. The problem is, if the Fed is not able to lower the rates as aggressively as they want. So stockcharts.com, it's called the dynamic yield curve. It is a great vehicle to give you confidence in your trading. So I hope you guys like that. I think it's pretty cool. Definitely play around with that. Let's get back to the slide deck and push on. Okay, so now I'm thinking rates are going lower. I'm a big fan of just common sense trading. When rates go lower, which sectors are going to thrive? Well, the 4 main ones are going to be 1, real estate, right? Real estate, lower interest rates, make mortgages more affordable, boosting property values, increases demand. So for sure, real estate. Consumer discretionary. Reduces the borrowing cost. Big ticket items might be more approachable for people. What about technology? It's lowering the cost of capital. Technology growth companies need lower cost of capital. As rates go lower, speculative technology companies usually do well, and then financial sector. It stimulates borrowing. It stimulates movement in money. I did a little analysis looking at REITs. If we look at the biggest players in REITs, I have them in front of you. SPG, PLD, VC, DLR, PSA, AMT, CCI, Equix, and O. whenever we're looking at a sector, I like looking at the market caps in the sector. I like looking at the volatilities in the sector. The implied vol, historical vol. Why? Well, VISI is towards the low end. DLR is toward the high end towards historical volatility. What about the implied volatility? VISI is right up with DLR. Historically, VISI trades at a lot lower historical vol. So if I was an option buyer and I'm looking for a place to buy options, well, DLR might make more sense than VICI or PLD. Look at PLD with a 30% implied volatility to the 19% historical, right? So look at things relative to one another. Let me see if I can take this concept a little bit further for you. And I want to take this further with some charts. So if I look at REITs right here, and we start going through them, Simon Property Group. Give you a little bit more data because I want you to see how it looks like, because you can see like the market is trying to front run REITs. Okay? SPG right at the top of its expected move. PLD trades up to its expected move, sells off. VISI, nice and strong too, right up to that expected move. Boom, sells off. DLR, same thing, hanging by its expected move. PSA. PSA, outside of its expected move. Super strong, way stronger than the others. AMT, outside of its expected move and trades right back in. So what I'm doing is just doing a sector analysis by going through each one of these names. Well, what you can do after that, PSA. I use this as an example because PSA was so strong and closed outside of its expected moves. So what I'll do next in doing an analysis of any kind of sector, this one specifically talking about REITs, I'll dig in deeper and I'm going to look at the storage sector. And looking at the storage sector of REITs, you can see they're correlated. They're moving together. Just look at them as 4 lines going back 3 years. PSA is the strongest out of these 3. So if somebody wanted to get long, potentially you would consider NSA. NSA rather than PSA. Maybe if you wanted to do a pair trade, PSA is expensive relative to NSA. It's just important that if you're going to do a trade, there's a reason for doing the trade. What's the reason? Well, for REITs, interest rates are coming lower. It's a good time to buy REITs. You drill into the sector. You find value within the REIT storage sector, so you're buying what's inexpensive and you're able to sell what's expensive. It's just a really, really cool way and sophisticated way to analyze the market. And it's what we do in our Discord community every day, talking about different trades. Again, what I said earlier is when I'm thinking about topics for these videos, I'm thinking about how could I add value for you guys watching? For one, how could I teach you to trade options and to look at the market as professionals do? But also, how can I share ideas that could potentially make you guys a bunch of money? September 10th, I got on here and did our Masters in Trading Live, and I did a special segment on uranium. In that segment on uranium, I shared 5 names: CCJ, CEG, Duke, Oklo, VST. CCJ, 10 days ago, was trading 37. Today, it's trading 44. Duke, 10 days ago, was trading 116. Duke is right back at 116. CEG, 10 days ago, CEG, guys, was trading 174. Today, it's trading 240. That was just 10 days ago. 10 days ago, VST was trading 74. Right now, VST is trading 100. That was just 10 days ago. 10 days ago, Oklo was trading 5.5. Today, Oklo is trading 7.8. Follow along. We're sharing information that could help you. Finally, Bitcoin, Ethereum. Ethereum has really been dragging. This latest move has been a lot more about Bitcoin as opposed to Ethereum. In my opinion, a little bit of finger crossing at this point, but I think Ethereum is going to keep up. But I do like to see more and more just love behind the crypto community. And you're really seeing that with both candidates now. Probably a little bit more with Trump, but it's nice to see crypto has got a nice bid behind it as well. That gets us through what I prepared in today's presentation. If you have any other, I don't know about requests or just different segments that you want me to cover in these Masters in Trading Live, I do get on here every day and I think, how can I add the most amount of value for those listening? And September 10th, there was a tremendous amount of value for those who jumped into those uranium trades. Thanks for watching. Have a fantastic weekend. And I'm so excited because our Masters in Trading Challenge kickoff, it starts this Monday. All right, guys. Everybody in All Access, you guys hang out. We'll be right back.